On the podcast with us today is Cenedella. Welcome to the podcast.
Hey, Dan, thanks for inviting me on the podcast. Look forward to chatting with you and maybe helping your listeners on their investing journey. So I'm looking forward to this. Hope to learn quite a bit by our chat.
Awesome. Well, just so everybody who's listening knows, we're going to be diving into this Springdale Apartments property. It's a 12-unit property out of Spartanburg, South Carolina. So Arn is not too far away from me right now. He's up in the Greenville, South Carolina market, and I'm over here in Columbia, South Carolina. So we're not too far away from each other. But Arn, before we dive into this property, why don't you tell us real quick about your history and your background and kind of where you are right now on the multifamily side of things?
Well, thanks, Dan. Sure. So I got into the residential real estate business back in 1978. I was 22. This was in the San Francisco Bay Area, Menlo Park, California specifically. And I've been a long-time single-family investor and residential broker. And literally, COVID hit March 2020, kind of a light bulb went off. And multifamily investing made a lot of sense to me for where I'm at in my life and investing career. And so I've spent most of this year educating myself and kind of getting actively involved in the multifamily market. So it's exciting to me to kind of learn a new facet of real estate after basically spending my whole career in residential real estate.
Well, let's dive right into this one out of Spartanburg, South Carolina, called Springdale Apartments. We mentioned it earlier, 12 units. What was the acquisition price on this one?
Total cost was $1 million.
So right at $1 million. And does that include the CapEx, or is that just the purchase price?
That would be just the purchase price.
Okay, so right at $1 million. And talk to us about how you found and sourced this deal.
Yes, sourcing deals is always difficult. So this one, actually, I put a post in a local Greenville real estate Facebook group on, I think, a Wednesday morning, might have been a Thursday morning. And about noontime, a wholesaler called me and said, "Hey, Arn, I've got some units." And I said, "Well, where are they?" And he said, "They're in Spartanburg." And I said, "Well, if they're in Converse Heights, neighborhood of Spartanburg, I'm interested." And he said, "Well, guess what? This is your lucky day. They are in Converse Heights." And so I sourced the deal through a wholesaler. He and I connected on a local Facebook group. I had never spoken to this man before, and he just happened to have this property. And I own other property in that particular neighborhood, so I was familiar with it. And so I kind of jumped right on it.
So walk me through that here, Arn, because I get approached by wholesalers all the time. They're usually the big red flags that go off when I start hearing from wholesalers. So what was it about maybe this one that made you kind of not have that same kind of pause?
Well, yes, so you're exactly correct. I would say oftentimes wholesalers complicate the situation because you don't have a full picture. You're maybe not in direct contact with the seller or the seller's broker. So I think there are some legitimate issues there. And one of my ongoing, let's call it a battle, though didn't get to that level with the wholesaler, was I kept trying to explain to him a purchase of a 12-unit $1 million property is different than a $50,000 fix and flip. Right? $50,000 fix and flip. You look at it, cash, boom, you close 3 days later. And in this case, I had to finance the purchase. Some of the financial documentation was limited. I was able to access one or two of the vacant units prior to making the offer. So I was able to take a look, and I liked what I saw. And then I entered in the contract, an assignment of contract with the wholesaler. So there were a few rocky moments due to that, but we persevered and got it done.
So you toured 1 to 2 of those vacant units and decided to go ahead and put an offer. I guess you didn't really put an offer in because with the wholesaler, they basically are just assigning the contract and you're negotiating the wholesaler's fee, right?
Pretty much, yes.
Yeah.
Yes.
And so for maybe there's a wholesaler listening right now, what would you say to them is kind of the major difference in a fee that they would get from a $50,000 kind of wholesale deal versus this kind of a wholesaling deal?
Well, the wholesaler tried to talk to me about the assignment fee should be a percentage of the purchase price. And of course, I objected to that. I said, no, it's not going to be a percentage of the price. So certainly the wholesaler fee should be some proportion of the purchase price. But I would say, just like real estate commissions that decrease as the price goes up, the wholesaler percentage fee should also decrease as the price goes up. And this was probably the biggest wholesale fee this gentleman ever had. And, it's just funny how life works. He has a text campaign and he was texting single family owners. Somehow he got this guy on the line and no, I don't have a house to sell, but I got 12 units to sell. So it was just kind of a fluke thing. And, he was in the right spot.
Yeah, I've actually seen that before where, I've seen even some of these large, 20, 30, $40 million deals that I've seen come through from wholesalers, and they're like 3% wholesale fee, and I'm like, I don't think that deal's going to work with the 3% fee added on top of what you're going to sell it for.
Yes. I mean, hey, look, business, everybody needs to make a profit. It needs to kind of be a win-win situation, but there needs to be a balance. And I don't need to go into all the gory details, but through the course of the transaction, the fee was negotiated down to the ultimate total cost of $1 million. So as I got into it, I was able to renegotiate the fee. And from the wholesaler's point of view, he was making a great payday. So let's make it happen. And I was satisfied with the total cost.
So total purchase price on these units was right at $1 million. So right at a little over 83.3 as far as the per door, 83.3 thousand on the acquisition on this particular property. What were the rents like on this property?
They would range from maybe 800 at the bottom to the more recent rents of about 9.25.
Okay.
So yeah, go ahead.
Yeah. So what's the unit mix?
They're all 2-bedroom, 1.5 bath units, almost 1,000 square feet. So they're nice quality units, living room, dining room, kitchen, separate laundry room, 2 bedrooms, 1.5 baths. So quality units, and I could see some potential for them moving forward, though the condition overall was good.
What was the vintage?
Late 70s.
Okay. So going into a late 70s product, what would you say was some of your kind of questions or concerns moving into that kind of a quality property?
Well, so the roofs were 1 year old. The driveway had just been resealed. They had modern dual pane windows that had been in for some time. So my main concern were the HVAC units and the hot water heaters. And the building's nicely laid out, so all of that was very accessible in the sub area and kind of a basement area. And it was clear that about half the hot water heaters had to go, about half the HVAC units had to go. And I accounted that into, my business plan. And we've already replaced the hot water heaters. And I think we are having our 4th new HVAC system put in today. So those were obvious issues. The units themselves are pretty good. They had put down LVP and were in generally pretty good condition. Laminate countertops. And one of the things this is what I would consider a strong B, low A neighborhood, kind of upper middle income, single family neighborhood. So we may experiment over time, maybe go granite counters and just kind of see what we can bump the rent to. Maybe wait till we get through COVID and then test the market a little bit.
What kind of earnest money deposit did you have to put down on this one?
5,000, and you always want to know it was hard.
So it was 5,000 hard day one. Was anything else have to be put up after due diligence?
No.
So just $5,000, and that was non-refundable day one.
Correct.
Good. And what was the business plan, or what is the business plan on this property?
I think the business plan. So this is my first multifamily purchase, and so it's going to be part education. I think our approach will be we've got 2 vacancies now. We'll do some minor upgrades to those units, basically just clean them up, maybe change out the appliances, get those rented at 950 is what we're shooting for. So I think fill the 2 vacancies we've got now, and then over time, as we get vacancies, we'll upgrade the units and kind of increase rents. Many of the tenants are on month to month. According to the property manager, they were going to raise rents spring 2020, and then COVID hit, so they stopped. I own other units around the corner, and I have a pretty good sense this kind of 850, 900 rent that they're getting is a little bit below market. So I'm optimistic we can get it up there into the high nines fairly quickly.
And what kind of property management are you doing on this one?
This one we're going to self-manage. So I own this with 4 partners, 1 major partner and myself, and then 3 minor partners. And these are people, 3 of them are in Greenville. The other one is a brother of the Greenville kid. They're young, mid-30s, early 40 engineer types interested in real estate investing. And they're good at all the things that I'm not good at, which is systems and operations and organization. I know you speak about that constantly in terms of multifamily. So we've kind of divvied up. I'll take kind of the tenant relations, overall operations. We have 1 guy working on the finances, 2 will handle the maintenance and repairs, and the other 1 will kind of fill in as needed. So it's a total of 5 with me. And we've invested in numerous flip projects, and I've kind of been talking to them about multifamily, trying to get them interested. And this is our kind of first venture into the space.
So how did you convince them to kind of jump ship from single family to multifamily?
I've just been talking to them about it, and making the arguments about the multifamily thesis, the idea of scaling, some economies of scale. Of course, 12 units isn't really anywhere near what you need, but there's a lot of reason behind multifamily. Probably get better cash flow than off single family homes. And they're looking to So I think multifamily sets up much better to provide kind of ongoing income than, say, fix and flip, which is quite an active kind of grind.
So let's go back to the seller on this particular property for just a moment. Describe to me and kind of tell me, what type of seller was this? Obviously, I went through a wholesaler, but what kind of seller was this that had it before?
The seller was 4 elderly folks in their 80s who had owned the property about 10, 12 years. The son of one of the owners managed the property. So this was kind of a 10-year plus ownership by local people. And I think basically they were all in their 80s and they just wanted to get out of the property business. I suspect they own other property and will be selling that over time too. So kind of a long-term owner, older, and just ready to get out of the rental business.
So does that open up an opportunity for you to potentially acquire some of the properties that they own right now as well?
Yes, I can certainly. I have a relationship with one of the owners who kind of met us at the property and let us in. He's a banker in downtown Spartanburg. So yes, I will be reaching out to him as things move on. And as often the case in these kind of loosely formed partnerships. One of the four owners didn't quite see eye to eye with the other three. And of course, that caused some complications, but we were able to work through that. So, yes, I'll keep in contact. I had a good relationship with the bank person and we'll reach out to them directly.
So do you know how this wholesaler originally kind of was able to be aware of this particular deal?
It was through his text messaging campaign to single family owners, and perhaps the person he got a hold of owned a single family house, and that's how he was on his list. And he said, "No, I don't have a house to sell, but I've got these 12 units to sell."
Hmm. Okay.
Even a blind squirrel gets an acorn every now and then.
Yeah, that's right. That's awesome. That's awesome. So what are some other things that came up, or if there was anything, was there anything that came up during the due diligence process?
No, we eventually were able to get into all 12 of the units and do a quick inspection. I hired a home inspector to go under the structures, evaluate all the HVAC and hot water heaters, though what he found was basically visible and it was kind of obvious. There were no real surprises in the home inspection. At one point, they didn't want to let us in to do the appraisal. And I was able to work with my lender, which is a local credit union, and they agreed to just do an exterior appraisal due to COVID. So I was able to get the loan funded based on an exterior appraisal. So that was kind of a last second potential problem that it took us a day or two to get through. And again, one of the four owners was not quite in line with the sale, and that person made it a little more difficult. There would have been no problem letting the appraiser back in the 12 units. We had already been through them once, but for some reason that request bothered that one owner.
Okay. Talk to me a little bit about the financing on this one. You mentioned the local credit union as far as being the lender. Walk us through and talk us through how you ended up choosing this particular lender.
So I've done business with this lender prior on some smaller multi-units I own in Greer. So this would be your typical kind of commercial bank financing, I think you would call it. 4.15, 20-year amortization, due in 5.
Okay. Recourse?
Yes.
Yeah.
And so the two majority investors, which was me and one other person, are the ones who signed the note and signed as guarantors.
Okay. And walk me through, did you get quotes from other lenders, or because you had a established relationship with this lender, you just kind of went with this one?
I went with this one. I did check with one other lender and the rates were kind of about the same. And of course, the other issue was, since this was an assignment of contract, I had to make sure the lender would play ball with that. And actually, the two lenders I contacted both said that was fine. But that was another kind of concern because it wasn't your typical PSA agreement between buyer and seller. And the rates seem to be about in the ballpark of what I understand the market to be. And down the road, we may revisit the issue and look at some different financing as we get the rental rates up and go from there. And if things go well enough, maybe at some point we can move it over to agency debt, which then would be a real win. We probably got to get rents up to about 1,100 a unit to make the value large enough to have agency debt considered.
Mm-hmm. So when it came down to the financing, was there any opportunities, or did you even consider or pursue any opportunities of doing some sort of like seller carry or anything like that with the financing?
I broached the issue, but the four owners just wanted their cash.
They wanted
They
to
were
get out.
80, yeah, 80 plus. There was health issues amongst one of them, ongoing health issues. So yes, because in my mind, uh, uh, they owned it free and clear, but again, it's four different families that owned it. Uh, it would have been a perfect deal for owner financing, and they could have received a nice monthly income, a nice good down payment. We could have spread their capital gains tax over a couple years. So yes, it seemed to me to be an ideal candidate to do that, but the sellers just were not interested in talking about that. And again, the lack of direct communication could have hampered that effort too.
Yeah. So 4.1%, right now with COVID and everything, the interest rates have really kind of plummeted and gone way, way down. 4.1 seems a little bit high. Not saying that was a bad interest rate, but seems a little bit high. Can you walk us through and kind of share with the listeners about, why it was 4.1 versus maybe a lower interest rate than that?
Um, the two sources I checked, one was at 4.1, the other was at 4.25, and it was basically the uh, same kind of program. Uh, I think we paid a half a point for the loan, so it wasn't very expensive. So we'll visit it, but I was kind of more focused on going with somebody that I knew would close the transaction. We kind of had 30 days to do it with the holidays. And so I kind of took the path of least resistance there.
Are there any prepayment penalties?
No.
So no prepay.
Right.
And what about reserves? Any COVID reserve that was required?
No.
Well, that's good.
Yeah.
So definitely
No, we do have reserves. So we do have reserves. They weren't lender required. Yes.
Yes. Correct. Yeah. No lender required reserves that they're holding on to and not giving you any spread for. So
Yes, exactly.
good. Let's talk about the investors now. I know you mentioned that you are with four other partners and kind of a little bit kind of how they all are working within this project. How much of the deal was actually raised from investors, even though they are active investors in this particular project? So I'm assuming you did it as a JV partnership. Is that correct?
Yes, Dan. It was a JV partnership, and myself and one other investor put up about 85% of the cash. The three other minor investors each put up 5 to 6% each of the total capital we raised. Yes.
Okay. And what were some of the what are the return metrics that you are looking to be able to achieve on this property?
Well, that's an interesting thing. I come from a residential background, and I'm trying to learn. I'm trying to shift my perspective. Uh, so my residential investing background from the San Francisco Bay Area, which is not a cash flow market, is buy good properties, good locations. If they pay for themselves over time, you have a good sense you've made a good investment. So this property, we're kind of anticipating maybe about a 4% cash on cash return year one. And from there, we can start ramping it up. And I think once we get through COVID, make some minor improvements to the units, we can start ramping the rents from 850 to 9. The average now is 865. The last rents were like 925. I think we can soon quickly ramp it up to over 1,000. And then I think we'll start seeing more of the 7 to 8% cash on cash return. The other interesting thing that I'd like to get your input on, and I understand $1 today is worth more than $1 tomorrow or $1 5 years from now. Kind of your take on how do you evaluate principal pay down as part of the cash flow if you do, and how do you kind of weigh that? Because if you include principal pay down, then we're about 6% cash on cash return year one. So I just interested if you have any insight on that and care to share it.
Sure. So before I dive into that the answer to that
Okay,
question.
sure. Okay.
Are you planning on doing any distributions year one?
Probably not. It's going to be minimal, if anything. No, I think our plan is we want to get control of the asset. We want to get the units all rented up. We want to make sure our operation systems are good. We're not anticipating a lot of cash year one. So it's not so much a monthly distribution model. It's kind of more a long term. And then over time, once we kind of get our feet on the ground and we understand how the asset's performing and we get through COVID, what's going to happen? Here we are today. Moratoriums are being extended. What's going to happen there? So I think the cash flow and the distributions are going to be kind of more a year two thing that we'll start looking at. And
Okay.
I'm kind of one, I like having some money in the bank. In today's world, I think it's just better having some reserves there and not sending out a couple $100 here and there that isn't going to make any difference to anybody.
And is this a long-term hold strategy, or are you planning to try to still sell this in like a 5 to 7 year time frame or something?
I would say it's going to be more long term. I mean, I think so. Other than me, all the investors are mid 30s to early 40s. So their time horizon's probably a little longer, but I'm going to be here a while, so I'm not worried about that. So I think ideally our plan would be to get it in 3-4 years to a point where we can maybe go to agency debt. And then the cash flow is really going to pop. And then from there, it could be a long-term investment. I think the other exit strategy would be, to some degree, I'm trying to put together a team to perhaps move more fully into the syndication space. And so this is one kind of a test run for the team. The other option would be down the road, if we get some appreciation and we like the way everybody's working, maybe we trade out of it into a bigger building that we just JV ourselves 5 years down the road. So I could see us going either way. I don't know what the future holds. So, that's kind of what we're thinking now. And all of the other investors are on board with that, and we kind of have the same outlook as to what this investment is and what we hope to accomplish and learn by doing it.
Mm-hmm. And so to go back to answer your question about the principal pay down that you had asked me about, so you wouldn't necessarily calculate it into the cash on cash, because that you can't take that cash out and then reinvest it somewhere else. So it's technically dead equity that you're building up inside of that property, even though you're going to get that appreciation from the rent growth and the rent premiums that you're going to be able to achieve. But it's that's why you really have to model it out in an actual spreadsheet format to say, okay, as we're paying down the principal when we sell the asset, that's going to get added back to the sale proceeds to be able to see where that return comes in. But the reason why it can't be calculated like cash on cash is because you're not technically getting that money to be able to reinvest it. So you not only are going to get that whenever you actually sell, which is why it's also a good strategy, even on your part, Aaron, to even with a lender that you've dealt with, and even more so a lender that you've dealt with on a couple of transactions, is to ask them for interest only. Even if it's for a year, 18 months, 24 months, any type of interest only that you can get will allow you to have higher cash flows for the property during that period. And you can either take those and reinvest it back into the property, or you can take those out and reinvest them somewhere else. And you now are having that compound effect with that return.
That sounds like great advice. And I'll give my lender a call and try to be a little more aggressive and work a little bit better deal. So I appreciate that.
I mean, I always said the worst thing they could say is no, right? I mean,
yes, no,
you say.
You're correct. And, this is all a learning process for me, and I'm enjoying it. And it's a good, solid property, solid area, and I feel good about that. And I think also you learn best by doing, right? And so I think, you kind of got to get in and you learn, and hopefully you don't make big mistakes, right? I don't know any other way to do it. I mean, you could read a million books. You got to kind of get into the arena or the marketplace and do it. And I'm one that will proceed forward and adjust as time goes on. So procrastination isn't my problem. Not that there's not benefit in procrastinating. So, I understand both sides of the coin.
Well, I'm kind of like you as well, Arn, because, I'm the type of person that's going to, fire, ready, aim, right? Or fire, aim, ready, because, I'm the type of person that's going to get in there and do it. And I'll learn a lot of the process and the systems along the way. That sounds just like you.
And maybe Danny is your break. So
He definitely is.
so my girlfriend and I joke, I'm the engine, Laura, my girlfriend for 17 years, so life partner. We joke, I'm the engine and she's the brake. And she doesn't really care about real estate, but I bounce things off of her. And so it's an interesting dynamic. And I think you need both. And, the one thing I'm learning is, multifamily really is a team sport, and you have to bring the right talents to bear. And I understand where my weaknesses are. And that's why I love having a couple engineers on my team who will kind of provide some of that detail, where maybe I'm kind of more big picture, let's do it and let's move forward. So it's really fascinating.
So is there anything else, Arn, about this particular acquisition that you think might be interesting for us to talk about that we haven't touched on yet?
No, I think certainly there's a qualitative aspect to investing. But I think there's also a qualitative aspect of the investing. I think when you look at a property, it can be either of quality or of not quality. And this, it's 2 6-unit buildings, and the units are great size. The floor plan is good. And so for me, the overall quality of the property and its future potential maybe carried greater weight than some of the immediate numbers. Not saying that's right, just saying that that's kind of how I look at things. So to me, the quality of the property enters into my kind of calculations.
Well, I have 2 final questions for you as we wrap the episode up. And they're questions I always ask every guest member, a guest person that comes on. I think you probably know these, because you said you've listened to a couple of these episodes, but the first question is going to be, what did you find that was easier during this entire process of acquiring this property that originally you might have thought was going to be a little bit more challenging?
Well, I thought the financing actually went a little smoother than I thought, especially with the no access appraisal thing. So I think the financing went fairly smoothly. Not that it was a big surprise, but this is my first 5-unit plus loan, and so that went smoothly, and I'm thankful it did, given some of the other issues that were going on.
And then the last question here is kind of a contrasting question to that. What did you find that was harder than expected that originally you thought was going to be a little bit more easy?
The harder than expected was kind of having the wholesaler in the middle. Before I entered into assignment of contract with the wholesaler, I kind of laid out my expectations as to what I needed in terms of access to the property and the documentation. And it was kind of a constant struggle to get the documentation and ultimately the access, though I found a way around that. So I tried to set the expectations. So I thought I had that part kind of worked out. The wholesaler assured me, yes, no problem. And it turned out to be more difficult than what I had hoped.
So would you buy another property through that wholesaler?
If I liked it, yes.
Okay.
If I liked it, I would, yes. Because I think ultimately it's about the property, and the wholesaler's gone, and now it's the property and my team and my investors, and so I would not rule that out.
Good, good. Well, Arn, how do the listeners reach out to you if they want to find out more information about this particular deal that we've already spoken about today, or maybe they want to continue to follow you and maybe join you on one of your future acquisitions?
Great. Thanks for the opportunity to do this. So I have formed Spark Investment Group, which is kind of intended to take smaller scale single family investors like I am, like I was, bring them into the multifamily space either through syndication or joint venture. So my website is investwithspark.com. Email would be arn@investwithspark.com, or you can catch me on my cell 650-575-6114. And of course, I'm on Facebook and LinkedIn, so you can find me there.
Awesome. Well, Arn, thank you so much for jumping on and spending some time with us today and sharing about this acquisition. It's really exciting to kind of see your transformation going from single family to multifamily and jumping into it so quickly, and looking forward to continuing to follow you as you close more deals and having you on to a future episode.
Hey, that would be great. And Dan, I appreciate, you've been a big part of the journey and you've taught me a lot. So I'm appreciative of that. And I've had the pleasure to meet Brandon, maybe someday Danny. But anyway, you've been a big motivator, and I appreciate, everything you've done for me. So enjoy being here, and I'm looking forward to a great 2021, and I know you guys are too. So, let's get at it.
Awesome. Well, thank you so much again, Arn, and we'll see you next year.
Okay. Thanks, Dan.
All right.